My name is Lyal White. I head up the Center for Dynamic Markets here at GIBS. And today we're going to be talking about Asia, about China, and about how this region has driven global economic growth and is likely to drive that going forward. We're joined in the studio today by Kobus van der Wath, who heads up Beijing Axis, an advisory firm that stretches from China, Beijing in China, to Singapore, to South Africa, and back again to Indonesia. Kobus has fantastic insights into Asia and into China, and he's going to share some of those insights and experiences with us today. Now, Kobus, China obviously grew by 7 or 8% in 2012. There's been a mixed bag of insights into this economic growth. What is your take on Chinese growth, and where are we looking at going in 2013?
Well, Lyle, first of all, thanks for inviting me. And yes, China grew at 7.8% last year. We just saw the numbers for the fourth quarter last week, in fact, coming in at 7.9% for a full year. 7.8%, but that's in stark contrast with the 9.3% of the year before. So a significant slowdown in China terms, but still world beating as a large economy, looking at an $8 trillion economy. So practically 8% growth is no mean feat. The world, of course, got a little bit nervous over the first 2 quarters of last year when China showed significant signs of slowdown. But it did bottom out in the third quarter and still contributed, as it has done for many, many years, to global growth. And again, this year, it'll do the same, especially now that world markets are a little bit more comfortable with a broken Europe. Europe isn't fixed. It's not likely to be fixed soon, but at least we're used to it, and we know that people are grappling with the set of issues. And that allows Asia to revive just a bit from a slightly softer growth rate across the spectrum, from northeast to southeast Asia in 2012 towards 2013. So China is going to be a significant pull factor for the world economy once again and for the region. But we'll also see India bounce back perhaps by 1% to above 6.5% this year in 2013, and much of Southeast Asia around the 6% mark. So overall, strong performance.
Yeah, so you see China once again, and as it's done in the last few years, really driving economic growth in Asia, which is obviously the fastest growing region in the world at the moment and contributing enormously to global economic growth. But driving that economic growth in Asia in dynamic markets across the planet and being the key driver to global economic growth overall.
Indeed. If you look at countries like Indonesia, if you look at countries like Malaysia, if you look at coal, for example, in Indonesia, if you look at palm oil in the case of Malaysia, if you look at rubber in the case of Thailand, if you look at rice. So whether it's food, whether it's other raw materials, whether it is chips from Penang in Malaysia, these supply chains over the last 10, 20 years have all integrated with China as China started to rise and rise. So today, with China reviving from, say, just under 8% to, we think, just over 8% growth in 2013, it's basically good news for the whole of Asia that sells into that market. Also, China's investment globally, a lot of that goes into the region, into the Asian region, and it is in fact an important investment and trade partner for just about every country, not only around the world, but specifically in Asia. So provided that there aren't any severe setbacks in the situation in Europe, specifically that things in Japan continues to sort of muddle on and Japan muddles through, and a continuation of the consolidation of the economic situation in the United States, we think Asia is going to have a very good year, and it should be on radar screens around the world, in boardrooms around the world, for businesses that are looking for growth options, to invest, to raise capital, to integrate their raw materials and strategic materials and consumable supply chains into that part of the world. So yes, a bit more of the same in that sense. China will do well and will be a very important factor for many businesses in many parts of the world.
Now, looking beyond China, obviously Asia is made up of some enormous countries with large GDPs, large economies, large populations. They've got the advantage of demography on their side. Tell us a little bit about these lesser knowns. Some of them are very, very big economies that have been around for years. But tell us about some of those lesser knowns and which are your real kind of exciting picks that we should look out for in 2013.
Yes. Well, I think it's very interesting. Over the last 15 to 20 years, ASEAN, the Association of Southeast Asian Nations, has grown from a core few to a much bigger grouping of countries. And really it was in the beginning Singapore, Malaysia, Thailand, Indonesia, the Philippines. But we've seen another key region in Asia come into the picture. Vietnam, of course, after Doi Moi in 1986. And it continues to be an important economy in that region. But
what is the population of Vietnam?
Well, it's close to 90 million people. So although it's a very, I can say, oddly shaped country. It's very narrow, long and narrow, with a long coastline, and at one point only about 50 kilometers, 50 miles wide. It is, around 90 million people, and next to that is Thailand, or not far from that is Thailand, and in between Laos and Cambodia, and of course towards Bangladesh and India, Myanmar. So that region, you're looking at 250,000 people, all with relatively backward socioeconomic conditions, but opening up, becoming open societies more and more. Myanmar, a case in point, with political shift, positive political shift, perceptions in the world changing. And we've seen the EU establish a presence, the US, we've seen Australian companies lift their boycotts and embargoes, and they're all now from Europe, from the US, from Australia, looking at Myanmar and the region around it.
The key factor, the key ingredient with these is integration and connectedness, and how they are using this connectedness among those different countries to build their regional competitiveness. And I think this is a real lesson for African economies as well.
Of course, we look at the world map and we see borders, we see countries' borders. But if you think of the north of Vietnam and the south of Yunnan in China, these are really intertwined economies. If you look at Myanmar and China, if you look at Myanmar and Bangladesh, and you look at Bangladesh and India, these are really contiguous areas that trade, that have for centuries traded, that have had links.
Yeah, so it's that integration of the entire value chain in that.
And I think that is the opportunity for CEOs, for planners in businesses, whether it's in infrastructure, whether it's in services, whether it's in IT, as backbone is rolled out, whether it's financial services backbone or IT backbone, ports, it's all happening in some of these parts. Indonesia, almost 250 million people, over two large Sumatra and Java islands, and then of course many other smaller islands, significant resources, significant population, significant infrastructure need, ports, telecom.
But Indonesia, as we know, has been plagued by a lot of political and social uncertainty in the past. What has changed in Indonesia? What makes it an aspiring, dynamic market to really look out for in the years ahead?
Well, I think Indonesia there's a specific dynamic there. Until May 1998, Suharto ruled supreme, and it took 15 years. I can say it took 10 years to about 2008, a decade later, for that society to come to grips with the transition from a Suharto era to a post-Suharto era and a freer democratic environment. For the last 5 years since, it gained traction. We started to see governance. We started to see institutions play a different role. We started to see people reshoring that have taken capacity out of Indonesia and put it in China, putting capacity back, manufacturing capacity back in Indonesia. So overall confidence levels have risen, and FDI has risen. Growth has picked up and looks more sustainable. So it's interesting as a country because there will be continuous political change, which we believe will be favorable for doing business there. We're starting to see the government and the state structures speak a different language, open for business. And then if you think of the opportunity, it's across different areas, whether you're in resources, whether you're in manufacturing, whether you're in services. If you're able to choose your segments well and you can execute on the ground in Indonesia, there's potentially a very big prize.
Fantastic. So the real key lesson from these is connectedness, integration of the value chains, and in the case of Indonesia, establishing strong institutions, along with those vibrant companies, and bringing this all into the growth dynamics that makes Indonesia a truly dynamic market. Kobus, thank you very much, and we look forward to seeing you again.
Pleasure.